So, we are talking in our talks are in a juncture where we're talking about how important risk is.
Right.
Arun and myself, we come from very mediocre Bengali families, right?
Right.
And we've been told or we've understood that stock market is a gamble. Okay, risk is not a good thing.
Right.
Okay, safe. Play it very safe.
Correct.
Study. It's a good thing. Get a good job. A good job is which is a safe job. Okay, that मेरा life तो set है, right? So what we are trying to say is taking risk is very important. Okay. So let me ask you: you've been into the markets for a certain number of years? Do you think that stock market participation is a gamble?
Absolutely not. Because again, see, we have got an exploding population, right? We are on the threshold of hitting like 130 crores. That is huge, right? And look at the stock market penetration. Not even 2 crore demat accounts are there. And out of that 2 crore demat accounts, 40 lakh demat accounts are freezed, owing to a lack of PAN card. That is pathetic, right? I mean, not even like 1.2%. In the developed economies, it happens to be what, like 10% and 15%. So, guys like us or our friends or our cohorts or acquaintances, these guys are not inclined to put their money in FDs. They want higher superior returns, right? So obviously these days what we are seeing is a lot of our friends, they are asking ourselves to put their money in stocks. Obviously this would take time, but after a matter of say 5-10 years, the whole of Indian populations would be pretty inclined to stock markets.
The other thing is, see, in the short term, obviously equities is risky and debt is safer. But in the long run, if you adjust inflation, debt is a bomb which will explode, and or FD, whatever, fixed income. I mean, but equities, if you see the long term, then it does really well. And the place where say it becomes risky is when you try and compare your returns to others, or when you pick up a phone call and your friend says or broker says buy this and you go and buy that. Even if you stick to the basics that okay, I use these products, I've been using these products, let me just read a little bit about them, know a little bit about them, and then invest, being a retailer, and you can do very very well for yourself. Any of those consumption stories, be it a Maruti or a Colgate, have done very 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 good, given very good returns. Even in terms of, what the worst part is that people will be working in a bank, probably seeing what is happening there and trying to invest in an oil company, or there's a person who was very close to pharmaceutical industry, and we had a very big pharma bull run now. So his own company was growing very well, but he never invested in pharma. So not keeping your eyes open is where the risk is. If you keep your eyes open, you know what you are doing. Obviously the risk element is there, but then that's business, right? When the probability becomes 75-80, the risk becomes business. Otherwise it's speculation.
So just to add to my 2 cents, the problem is people would actually relate intraday trading or gambling with investments, right? So out of these 2 crores, probably 90% of those would be gamblers or traders. They would be buying something today XYZ with the hope of making a multifold return till 330. That is insane, right? You got to enjoy the ownership. These managements, these promoters, they are working from like dawn to dusk. They would be putting like 13, 14, 15 hours a day with so much of hassles. You open your computer, just put a click through your broking medium, bang, you are the owner, right? It's so easy. I mean, if they can't even afford that or if can't even do that, they should leave stock markets immediately.